some of the people who reviewed it initially, including Gladwell here, their feedback was that it's very technical. I was not alive to that because obviously as an economist, it's not as technical as this can get. I thought I had really kept it very simple, but they still came back and said it's very technical. Try to sort of make it a little more sort of palatable. I hope it is. So I think it has to be read slowly because it's got lots of numbers and it's about budgets and numbers. So I'll try and convey that flavor. But I think the most important thing is the context. One of the things I would like to start with before I talk about the report that Gladwell did not highlight is that probably more than anything else over the last 25 or so years, I've spent most of the work I've done in public domain has been on public financial management reforms. Starting with the early 90s, we started after the adoption of multi-party. During the one-party system, there was really no public financial management system because Parliament was just a rubber stamp for the executive. There was no public scrutiny or even disclosure requirements of the budget. The Auditor General was emasculated like many supposedly independent institutions. In fact, at some point, the Auditor General's security of tenure had been removed. Parliament did not even have a budget committee. It had been abolished. So I think for two successive parliaments, we did a lot of work with other people like Washira Maina and Betty Maina, who's a CS now, and Oloa Ringo and others, to strengthen the parliamentary role in terms of oversight. But it took a very, very long time, including establishing institutions like the Institute of Economic Affairs, which would then be able to support the opposition in terms of research and analysis, because Parliament did not provide that capacity. And actually, they were quite successful in getting public finance scrutiny and public participation becoming much more sort of mainstreamed. As opposed to being, the budget used to be a secret, a government secret, which was only unveiled on budget day, and that's the last thing that people heard about it. Such that by about, I think, 2000, we actually managed to push through Parliament something called the Fiscal Management Act, which opened up the budget to scrutiny against the much protestations by particularly the Treasury mandarins, many of who, are my professional colleagues. And after that, I think our professional relationship never recovered. The fact that we sort of made them accountable to Parliament, and they now had to come to Parliament. They had to publish disclosure reports. So that particular act was made redundant by the Constitution 2010, and because we then put that process, all of it in the Constitution in Chapter 12, because our previous Constitution did not have a public finance chapter. It actually had very brief provisions in terms of public finance. So we did that in the Constitution. We did other things. We strengthened the Auditor General. We split the Auditor General and the controller of the budget, so that we could have the controller do ex-ante control and do more frequent reporting, and have the Auditor General do audits at the end of the year. The purpose of more frequent reporting by the controller to Parliament was perhaps so that Parliament could act before the horse had bolted, before the accusation was that all audit function was purely post-mortems. So for me, I think I have probably done as much as can be done personally. And I think we've done as much as we can do to strengthen and create a best practice public financial management system as far as the governance dimensions of it is concerned. And of course, thereafter, there was a Public Financial Management Act, which was mandated by the Constitution. There was one which enacted. You do see, and you've seen a lot of attempt by the Treasury mandarins and the people who are now trying to subvert the Constitution to claw back some of the sort of accountability mechanisms that have been put in the Constitution to undermine disclosure in their efforts to sort of keep the system under control. So I am giving that background to say, so when Gladwell asked me how could we follow up on the state capture report that had been done by Washira, I suggested that, look, we ought to look at, we have a state-of-the-art public financial management system, architecture, so to speak. If we have a state-of-the-art public financial act, a real Rolls Royce of institutions and processes and disclosure requirements and public participation, why is it that the Jubilee administration, which took over and is the first one to implement the new constitution, has done the most egregious corruption that we have ever seen? How can that happen when we have the most elaborate public financial management architecture that you can imagine? So that, I thought that elaborate was to provide the context of what this. I said, I'm going to look at the numbers because I was already picking up some of these things casually because I sort of following and seeing where the lapses are. I said, when Edward Ouko spoke about budgeted corruption, I found that very intriguing because it's just that it gave a name to something that I was grappling with. You got this heuristic, or that's something that the public financial management system has been captured by the corruption cartel. So it has been subverted. We saw the electoral system subverted, for instance, completely, that we put in place under the new constitution in 2010. We saw it subverted completely in 2017. And I was drawing a parallel, I said, looking something which looks like the public financial management architecture has also been subjected to the same kind of subversion. And you begin to see this, for instance, just with the financial sort of accounting system, IFMIS leaking like a sieve. This is supposed to be a state-of-the-art financial control system and budgeting and system, and money was just being used to sort of siphon money out of the treasury. They said, it looks like we actually have we may have a much more severe problem. So, and that's what this study began to look at one particular area, which of course we know is where a lot of the money goes, which is infrastructure. And the other side of that, of course, we know that we have huge amount of debt, and now I'll come to the report. And again, we've seen a lot of debt and a lot of disconnect with the economy and other things. So I thought, let's try and sort of bring these things together. So you're looking at this as a first sort of preliminary investigation of, do we actually have a public financial management system or architecture that is fit for purpose? So I'll briefly, this provide the context, as I said. If you look at, I've got two data points here, 2012 and 2018. 2012 is just before Jubilee came to power. 2018 is at the end of their first term. And you want to look at what has happened to, no, I need to move this so that I can actually see the numbers myself. If you look at the numbers that have increased the most since Jubilee came to power in absolute terms is things related to debt. Revenue has increased 90% cumulatively, debt service 280%. Foreign debt alone, 870%. In other words, when Jubilee took over, foreign debt, interest on foreign debt was only 9 billion a year the last year. By 2018, it was 84 billion. But of course, the domestic one has grown more because the domestic debt is more expensive. When they took over, the interest was 17.6 billion. By 2018, 240 billion. And these numbers keep going up. Debt itself has gone up 200% from 1.4 up to this point was 4.8 trillion. It is now 7, I believe 7.5 as we speak. But the economy in nominal terms has only expanded 104 terms, 38% when you adjust for inflation. And then if you look at the bottom, two things which have got negative numbers: revenue as a percentage of GDP and investment as a percentage of GDP. So those two things, when you borrow money for investment, public investment, you're borrowing money for public investment, crowding private investment. Yeah, you're building infrastructure so that the private sector can also invest and expand the economy. And then that private investment, crowding in private investment and private business, then expands your tax base. And that tax base, you are then able to use that to pay your debt. That's the business model. So you borrow to finance catalytic private investments like infrastructure. That crowds in private investment. Private investment then expands the economy. You get a bigger piece of that pie, and then that is what you use to pay your debt. But now what do you see is a situation where you're borrowing heavily. You are putting money in this public infrastructure, but in fact, your private investment is shrinking, and therefore your revenue also is shrinking. So your capacity to service that debt is actually falling, which is no surprise then that you can see that debt service as a percentage of revenue, and this is interest only, has more than doubled from 11% to 23%. So almost a quarter of revenue in 2018 was paying interest on debt. It is much more than that as we speak today. So these are important economic contexts, because those who know that I've been railing against this borrowing and infrastructure spending for a couple of years, and many people say that I was anti-progress because I'm preventing government from investing. And I said, look, before you get returns from those investments, you're going to have gone bankrupt. Because you always have to ask yourself, how do you pay for it? And many people actually were not paying attention to that. Anything you borrow and invest has to be able to pay. The next thing I provide in terms of context is actually to show exactly how that happened. This is a picture which shows analysis of GDP growth. You keep hearing that big growth numbers. You're saying the economy is growing by 5 to 6%, but at the same time, you're also hearing that people are in distress, businesses are shutting down. Every so often, people are showing me newspaper pages where there are 5 or 6 pages of things being auctioned, which have been repossessed from businesses that are unable to pay their debts. So on the one hand, in the real economy, you don't see growth, but on the other hand, the headline growth numbers, you are told we are growing but 5 or 6%. And this is actually related to what I am going to talk about. You're going to see it. What we see here is I have circled in dotted lines about from 2012 to 2015 at the top there. That was the contribution of private investment to growth. Yeah, you can see some private investment to growth. And then I have circled 2016 and 17 that figure has turned negative, that the private investment is no longer contributing to growth, even though the growth, which is a round circle, has remained at that number between 5 and 6%-ish. But if you look at its composition, private investment is not there. Even private consumption is shrinking. And the things which are contributing more is public investment and government consumption. In other words, what we are calling growth is actually consuming debt. It's a debt, it's deficit financing. It's actually just a deficit stimulus, so to speak, that is translating into headline growth numbers, but it is actually not contributing to whatever. So again, these already tells you that you have a problem with the productivity of the public investments that you are making. So if you're making public investments that are supposed to benefit the private economy, the private sector, whether you're talking about industries or farmers or the tourism sector, whoever it is, who then finds these new opportunities because you have infrastructure where you didn't have infrastructure before, or your infrastructure is more efficient and therefore their cost of business is going down. So it says that the investment that we've been making with all this borrowed money is not actually doing that. We are beginning to get the sense that it is not doing that. So we then are compelled to ask the following question. What have we done with the money that we are borrowing? Huge amounts of money. just to give a sense of perspective, which is in the report, the national government has spent about 7 times more on development projects per county. If you take that money and divide it by county over that period, the review period I'm working with is the first term of Jubilee, the first 4 years, it has spent 7 times as much as the county government, each county government. So if you go to a county, you should be seeing 7 times more national government development projects than county government ones. I mean, national government projects should really be just crowding out. So you should not, they should be all over the place. But I don't think there is any single county where people will tell you that the national government has done more than the county government. In fact, what you find is occasionally you a celebrity project. Like not too long ago, the county government of Makueni built a small hospital, 160 million shillings. And it was a big deal. And you look at if the national government had spent the kind of money that you're talking about, we probably should have 5 or 6 of those in every county, yeah, or more. So there's a disconnect between the projects that the government is doing and the amount of money borrowed. 6, it found 1.8 trillion. It is now 7 point something. So it has actually borrowed about 5.8, 5.9 trillion shillings. Where is it? Then you say, if so much money has been borrowed and spent and we can't see impact, how is this possible? Because that's what a public financial management system is supposed to do. It's a cycle where the budget at the planning stage is scrutinized, and then Parliament approves it, and then the executive executes. Then the Auditor General reports to Parliament on whether it was well spent, and those findings are factored into the next budget. And so over time, you expect a lot more scrutiny. The theory is if you have the power to scrutinize, we have the controller of the budget reporting to Parliament quarterly on execution of the budget, that the overall performance of public financial performance should improve. So the question is it that it's not improving, or is it improving and we are not seeing it? What is the system actually doing? So the study then looks at asking this hypothesis: if that's the situation, is then corruption budgeted? That this money is actually budgeted and there's a system of taking it out of the budget, as the Auditor General suggested? Because those are the questions that the Auditor General was trying to answer. He was trying to say what he has seen at the end of his term. It was a reflection. The reason why you have this sort of situation is because the budget system itself has been captured by corruption. If there is budgeted corruption, of course, that means, as I said, the PFM system has been captured by corruption cartels. And if the PFM system has been captured by the corruption cartels, and the public financial oversight is one of the core sort of pillars of democratic governance. You will recall that, in fact, the Magna Carta democratic reforms begins with no taxation without representation. And quite a few monarchs have been beheaded for this reason over the centuries. So if the democratic system cannot look after our money, it cannot hold the executive accountable for our taxes, then that in itself is a very fundamental failure of the democratic governance, because what then is it for? It has no meaning in terms of improving our lives. You elect people, they go to Parliament, they make a lot of noise, they're frustrated, and every year we're getting poorer and poorer and more indebted. I think you can see that really the system is not, if it doesn't do this job, the public financial management system, it cannot actually do any other job. Or rather, this is its most important function. There's no point spending money on it if it actually doesn't. There's no point hiring an auditor and paying an auditor every year if you keep losing more money and more money every other year. What's the purpose? And Parliament, its most important role is is an audit function. That's why the Auditor General reports to Parliament. So the way this is done is actually quite simple. What I did is I took 3 infrastructure sectors because they've been very active in terms of activity. We see it physically, we hear of it. Roads, electricity, and water. I was able to cover the first 4 years of Jubilee administration, because getting broken down data and properly reported is very difficult. Even just piecing together how much money has actually been spent, not budgeted. Because you get the budget every year, but there's what is budgeted is not what is spent. And getting actually reliable data, which is consistent over time, on what is actually spent per sector is actually quite difficult. And if you want to break it down to sectors. So, and it tends to, it's been improving. You can even see between these years. The main report, which reports this in a bit more detail, the sector reports, they've got a name, I've reported them. They've improving over the years, but they are inconsistent also because they keep changing the reporting requirements and all of that. And what I do, I would call it value for money expenditure analysis. I just look at what it's spent. And then I do that by doing some cost analysis and looking for cost parameters that you can use to tell you whether this is value for money. Doing a trend analysis, comparing the previous period of the previous government, using as a benchmark the first 4 years of the Grand Coalition government, and just some triangulation with very many sources, which I will highlight, because there are sort of some independent sources of data for some of these things, and you're able to sort of do some kind of eclectic analysis. So it's not audit, it's not a forensic audit, but the fact that we're able to find what I'm about to say just tells you how the magnitude of the kind of thing that we are dealing with. So I'll run through the findings quite quickly. I wouldn't go through all of them in detail. I just tell you what they are for each of the 3 sectors, and I'll highlight a few things. You can actually read the report. The report just shows how the analysis is done, but the findings are really what I highlight here. In those first 4 years of the Jubilee administration, which is my period of review, they spent 120% more than the Grand Coalition government over the same sort of period. Electricity sector spent 46% more. The road sector 51% more. Water 57% more. But the reason why the figure is much bigger is there's one big thing called the railway. Which is obviously not here. But if you take the railway out, you still get a figure which averages about 60%, 60-70% more than the previous government. So the question we want to ask, if they spend 60% more, if you factor in construction costs and all sorts of things, inflation, how do we actually see 60% more in terms of the infrastructure output? Now, what do you see? First of all, although the Jubilee has been saying very loudly how they have done a mother of all road building projects, in reality, the amount of road projects in terms of kilometers that they've initiated themselves is actually just about the same as the Grand Coalition government. If you see the report, I actually had to go through all the data, do a database of all the roads since the Grand National Coalition, every road started, look at it, how long is it, how much the budget, how much was spent, and just doing a time series of that. And the Jubilee actually hasn't done any more than the Grand Coalition actually did. But what you see is that the cost of the road building has actually increased by something like, it's actually almost doubled. But within that doubling, you have to break it up into 2 components. Yeah, because it's not like and like. It's apples and oranges. If you take the cost per kilometer, it nearly doubles, but it's apples and oranges. Why? Because what has been happening with Jubilee is a shift in the composition of the project portfolio from the normal roads, low, medium cost trunk roads connecting 2 towns out there, to very high cost, what you might call urban mega projects. Yeah. So you find that before Jubilee came, the only road which ever hit 300 million shillings per kilometer was Thika Road. But under Jubilee, you have a road which cost more than 1 billion shillings a kilometer. I think 1.2 billion shillings a kilometer. That's the Dongo Kundu something pass in Mombasa. So what you see is that you're seeing a portfolio shift where those sort of urban roads with interchanges and all manner of things, they are more and more of them in the portfolio. And there are fewer and fewer of they are consuming much more of the budget than the normal trunk roads that we would build, or rural access road to open up different parts of the country. But even after you take those out, and those are put, I think or you ask yourself, what economic logic is there that you spend on a short urban road of 1 or 2 kilometers with an interchange to improve traffic flow? You spend 3 billion on it. And that 3 billion shillings could actually build you something like a 40-50 kilometer road somewhere up in the North Rift, which can open up those regions and sort of improve the delivery of products. So you see all the time people putting in pictures of trucks stuck in the mud and they can't get product to market. But even after you remove that, there is a 20% cost increase, which works out to 16 million per kilometer, above what construction cost increase actually justifies, because the KNBS does provide a construction cost index on an annual basis. So you say, this is how much the actual costs went up. After you've taken care of those costs, and they're actually based on those projects, because KNBS collects the data from government, there is an increase, there's an unexplained 20% increase, which is 16 million per kilometer. And if you factor that, if you look at all the roads that they build and you do it on roads, this is about 50 billion shillings over the period I reviewed. And that works to over 700. Almost, if you're actually building roads at normal cost, you're talking about almost 800 kilometers of road, yeah, that you could have built with that money. That just the unexplained cost escalation over and above what is justified by normal, by what a BQ sort of would give you. So you've got two things going on. You've got money shifted to mega projects. And of course, you can sort of hypothesize that the reason people want mega projects is because they are more amenable to big bribes. Yeah, they are more complicated. You bring in big contractors. So if you are putting that money in rural access roads, that 5 to 10 billion shillings, and it's in about 20 road projects all over the country, I think it is much more difficult to aggregate the sort of and extract the kind of money out of the contractors as you would if you talk about a project which would cost 3 billion and then you double that to 6 billion. And of course, then you decide what it is that is shared between the contractor and whatever. So the size of the transaction, seem to be the ones which are driving what projects are done, as opposed to, and the distortion implied, the economic distortion is huge. So the budgeting of corruption here is in the projects is in the project selection. So projects with high economic return are left out, and what is put in the portfolio is projects with high corruption potential. That's the distortion. It's a very huge distortion. You don't see it physically, but you see these things, and Kenyans don't connect the dots. Why is it that all of a sudden we are doing all these very sophisticated peri-urban and peri-urban roads? Just actually around three. All of them are either around Nairobi, a couple in Mombasa, and I think 1 or 2 around Kisumu, and that's it. There might be a 1 or 2 in Nakuru or something like that. So that's what you see on the roads. Electricity is a whole lot of things going on there. Kenyans will recall that as soon as the government came into power, Jubilee government, they sort of proclaimed that they were going to increase power generation capacity by 5,000 megawatts. This meant fast tracking a lot of projects. The aim, if you had done that by 2016, we would have ended up with 6,800 megawatts of power. We do have a power planning system called the Least Cost Power Development Plan. And if you looked at the Least Cost Power Development Plan at the time, the projects they were fast tracking were, if you look at the demand forecast, when we would reach that kind of demand, was 8 to 12 years ahead, depending on the scenario. The low case, 8. So the best case, 8. The worst case, 12 years, depending on the group. Power consumption follows sort of economic activity very closely. You can actually just use a straight line whatever to forecast. But at any rate, that LCPDP was revised shortly within that period, and it reduced the forecast so that the kind of power generation capacity, we are talking 6,800 megawatts in 2016, is not actually required until 2037, 21 years from now, 2037. But still, even the projects which are already underway have created an excess capacity of 47%, because we now have about 3,000 megawatts. It was 2,800 when I was writing, against a peak demand of less than 2,000 megawatts. Now, you ask, who would do this? What is it? There were all sorts of arguments saying, no, the SGR is going to use it. Investors are not coming because we don't have enough power. If you want big industries, you must guarantee them power. I'm not going to go into the details why all that is poppycock. But the main reason, I've given an example in that case study. If you take the Lamu coal plant, which didn't take off, if this plant had been built and not used, because investors actually get paid for capacity availability, making plant availability, the capacity charge alone would have earned the investor something like 15% return in dollar terms, guaranteed. Yeah. Now, if you consider that we are paying investors 7-8% on Eurobonds, so what you're really saying is that this is really a bond, so to speak, a high yield bond. They put in a plant. It doesn't have to be used, but the capacity charge is enough actually to give them a return than they would get by putting that money in alternative investments, even in this country. So you can see that this fast tracking was a way of budgeting all these sort of investors. This was investors would actually build the plants and then fold their hands and just make money from us, from our power, from our power tariff. Because once the plant is put on the power purchase, on a power purchase agreement, that power purchase agreement is money, whether the plant is being used or not. So you can see the incentive for investors to put in, especially at a time when the world is going green. Therefore, there are a lot of people out there who are doing things like coal plants, as AMO was going to be, who are going to be stranded with these technologies. So if they could find a place where they can offload these technologies, because they can no longer use them in some of the countries where they come from, this is a very good way to make money, a lot of money out of them. And you're still hearing the same noises about us going nuclear power. It's motivated by exactly the same kind of reasoning. The second thing is, which is very well known in Kenya, is called last mile connectivity. This is taking power to everyone, including Banyatas. There is a quote in the report where the CS for electricity, energy or electricity announced that they are going to bring you electricity whether you like it or not. You don't have to ask for it. You're just going to find them installing electricity in your premises. Pendem si pende, as we say in Swahili. And what this ended up doing is saddled KPLC with about 900,000 dormant accounts, 12 billion shillings in bad debts, because the people they were connecting were supposed to pay 15,000 shillings and they haven't paid. And I think this year, it's predicted in the report, because it was written a while back, that it was likely that the KPLC was going to make a loss this year, the first one in a very long time. And indeed, I think in the last 2 or 3 days, it's been reported that KPLC has made a loss of 3 billion shillings, the first one in 17 years. And this is the reason. This is a huge part of the reason. This last mile connectivity business is a huge part of the reason. If you look at the logic of the whole thing, you can actually see there was no appraisal. There was no sort of economic appraisal of this project, because if you look at the numbers for phase one, they say they spent 13.5 billion, some of it borrowed from AFDB, to connect 300,000 customers. Now that number works out to something like 49 billion shillings, 49,000 shillings per connection. Now, for 49,000 shillings per connection, you can get a state-of-the-art solar kit, plus accessories, plus bulbs, plus a TV. So if you are going to provide this, you should ask yourself, what is the alternative? What is the best alternative? In fact, the solar kits, if you go to the market, you can buy one for 20,000 shillings. And if this household is being asked to pay KPLC 15,000 shillings for a connection up to the door, and then they have to put the wiring in, and then be paying sort of tariff, what would you rather do? If you want electricity, would you rather do that or spend 20,000 shillings to get a plug and play kit complete with phone charger, bulbs, everything is all paid, and then you have no bills? So clearly, if you are looking at providing power, it would have been so much cheaper to say, let's just sort of subsidize just solar power kits for low-income households or something like that. But you cannot say these evaluations. But that because that was not the purpose. The purpose of this was to sell transformers, to sell cable, to give people contracts to make those connections. The principal beneficiaries really were the vendors. This was a vendor-driven operation. Lots of top KPLC management were implicated in related corruption. I think there was quite a big purge thereafter, so this one actually just speaks for itself. The third item under whatever is transmission lines. I mean, if you go through the data, look at the government budget as what the government says it has spent. And then I was comparing that with the cost estimates of the same transmission lines by the LCPDP, which is actually done by external consultants. And they have itemized cost for the projects. And then you have the same projects itemized by KETRACO. And then you have the same projects budgeted by the government. And you can see that data, what the government has actually transferred, claims to have transferred to KETRACO to do these projects. And if you sort of go through those numbers, I come up with a discrepancy of 33 billion shillings between what is in the budget and what is actually, what has been not in the budget, what's spent, and what the LCPDP actually says those projects should cost. And they are quite well costed. And I have sort of listed them there in the report. Now, geothermal, big business in Kenya. The big geothermal operation now is this Menengai field that GDC, the company that was created purposely to do geothermal development, the special purpose vehicle, is supposed to be developing 400 megawatts. When you look at its annual reports, it says it spent 65% of the money for that. But when you look at the output, only 45% of the target is met. They have money. By now, they should have done more than half, because they've spent 65% of money. They should have probably close to 300 megawatts in terms of steam development. These are engineers, though they should know how to estimate these things quite well. But they spent 65%. Now, GDC inherited a portfolio, a field, which had been developed by Kengen in Olkaria when they were created. And if you look at, they're actually making money from those wells. And if you look at that revenue, I'm able to calculate how much does it cost, how much is the cost, because they have actually put them in their balance sheet as their assets. And if you look at those assets, they come to something like, and I think they're done at historical cost, they come at something like 90 million shillings per megawatt of power that they're generating, that they're using to generate to generate megawatts. Obviously, you generate power in kilowatt hours or megawatt hours, but yeah, it comes to about 90 million shillings per megawatt capacity that they have. Now, if you look at what they're doing in Menengai, they've done 170 megawatts capacity. And you look at the amount of money they spent, it works out to 440 million shillings per megawatt capacity. I mean, that's almost 5 times. And this is despite the fact that in this funding they borrowed from the FDB, they actually bought their own drilling rigs so that they can make it cheaper. But you don't see those cost savings, even though they have their own drilling rigs. You see 5 times the cost of what they have already done compared to what they inherited from Kengen. Yeah, so you're able to compare what Kengen did and how much it cost, which is now in there's a transfer value in their books, and what they themselves are doing. And you ask yourself, is it that the Menengai field is much poorer? Is it that the wells are much more expensive to drill? Didn't you buy your own equipment so that you can make it cheaper? But then you read the newspapers and you hear that there is a corruption scandals where where GDC was paying people to move rigs, private rigs, about 4 or 5 times, or double or 3 times what they should cost, what Kengen used to pay, despite the fact that their own rigs were idle. So they were using private rigs, they were paying people they paid some company, I think instead of 800, they paid them 1.7 million shillings per move or something like that. There's some scandal of that nature. So there's some shenanigans going on there. They were also funded to buy wellhead generators, which once you've sort of developed a wellhead generator is a sort of stopgap generator which is put on the well and it generates power before you build a power plant. Still, there is no generation. So the question is, did they buy the wellhead generators or not? And why is there no generation? It's a very interesting story of, you could read about the Silari field contract, because GDC borrowed money, the government borrowed money from some German KfW, I think. And then they gave the contract to a phantom company, a very ridiculous thing, because this company is just a briefcase address in Hong Kong. And they disappeared with the money. I think they've been pursuing the bank which gave a guarantee and all some other things. And I think there might be a recovery. But the point is, Kenyans should not be conned. Kenyans cannot be conned on geothermal. We've been in this business for such a long time that we know who are the credible geothermal drilling companies out there in the world. I mean, we have the idea that we can be conned and pay off a briefcase company in the geothermal sector is very suspect. And if you read that story, you will see that it is very suspect. Finally, just in terms of a summary, you look at the amount of money in the budget spent over a 3-year period, which I was able to pin down. This is the money in the budget spent on geothermal from 14, 15, 17, 18, 3 years, 52 billion shillings. And if it cost Kengen, the Okaria field, 90 million shillings per megawatt capacity, then when you take this money is equivalent to 580 million. That's what it should have added to the 633 we already have. So if we had spent this money properly, we would be talking about now having something like 1,100 or more, 1,200 most, actually, more than 1,200 megawatts of geothermal power. And geothermal power is now contributing most of our base power. So if we actually spend this money properly, we would have sort of solved quite a big chunk of our power, sort of base power requirement, and we would actually not be talking about coal plants in Lamu and stuff like that, and nuclear power plants and all. I'm just on the money we've already spent. So in 3 years, all we have to show for that money is 170 megawatts capacity in Menengai under development, having spent 52 billion shillings, which would have been enough to double the geothermal capacity that we already have, just benchmarking on those. Even if you say the costs have gone up to maybe 100, 120, you're still talking maybe 400 or 500 megawatts capacity that we could have done. Water. Now, I don't want to go too much into the Harold Kimarel sort of drama, because that's been the public domain. I just highlight one thing, that according to some journalists who looked at the public debt register, which has not yet been made public, it's supposed to be public, the recent update. The old one, I think going to 2015 is public. You can read it off the Treasury website. It looks like all the money that was supposed to be for the Moral dams that has not been built had actually been drawn. Because even by the time it's reflected in your debt, it actually means that it has been drawn. That's how it ends up in the public debt register, because you're now paying for the money that has been drawn. So the question then becomes, and we know, of course, there are no dams. Were the dams simply fronts for commercial borrowing to fund the budget? And these things do happen, where commercial borrowing to fund the budget is disguised as something else. Or perhaps the dam stalled and projects sort of went the way they did, and they decided to borrow the money anyway because they're desperate for money. We don't know, but there is a hugely untransparent thing to do with the Aral Dam financing, which is not about the corruption in the projects, in the dams. It is actually a question of procurement of debt. There's a procurement of debt issue, a big one, which is bigger than the issue of the dams. If this is indeed true, that this money was drawn, it was borrowed in the guise of building dams. Some money was advanced to contractors. Some of it was frittered this way or the other, perhaps. But if the whole of the amount of money has been drawn and is now part of our public debt, there's a much, much bigger question that need to be asked. I also highlight that there is a parliamentary committee finding of 20 billion shillings lost installed big dam projects. These dam projects, you look at these dam projects, you read those reports on each one of them, and you ask yourself, when did we become this incompetent? That every dam project stalls. Every big dam project has stalled. So there's something going on there. Whether the dams were meant to be completed, or they were actually just meant as fronts to get money out, you begin to ask questions. But the most interesting thing, or the more sort of critical thing, or what you might call actually the smoking gun in the water sector, is you look at the amount of money spent over the review period. I was talking about 143 billion on water projects. And they said this money has been used to increase the access water from something like 40 to 60%. You do the calculation, 6 million people. So that works out to a capital cost of about 24,000 shillings per person. And then I go back and say, wait a minute, you do have actual data on government water projects and how much they cost. They provide, this is the cost of the project. This is the number of, the volume of water that you're going to do. This is the number of people that benefit. There are some benchmarks, and I provide some analysis there which shows that taking an average of about 5 projects with very diverse costs, because water projects vary a lot depending on what the source is, how far it is from whatever, how much damming is required and dredging and all manner of things. That those 5 projects you're talking about they range from about 3 or 4 billion to 3 or 4,000 per person's requirement of water, if it's some number, to almost 30,000. But the average is about 12,000, even with that diversity. So they cover the broad diversity of projects that you would do. But if you look at the budget spent, it says the actual cost is actually double that. So you're saying, if you have provided water for 6 million people, you should have done it at 70 billion, not 140 billion. So where did 70 billion go on average? Unless those other projects are way more expensive than this sample of projects that I have. And the sample of the projects I have is very representative of the big projects that we've been doing, the collector, Northern Collector, Tato, Ruiro 2, quite a few of the World Bank funded type projects, which I think are properly costed. More interesting is going forward is you read the water strategic plan where I'm getting these numbers from, and they now plan that up to 2025 2022, they want to increase their access to sort of safe water from 60 to 80%. So they are going to provide 14 million more people with water at a cost, and they're asking for a budget of 496 billion shillings to do this. Now that works out to a capital cost of 36,000 shillings per person. Yeah. Now, if you work with 12,000 shillings per person, these 496 billion shillings is enough to provide water for 40 million people. So who does this kind of budgeting? And what's the purpose of inflating the costs? Obviously, when they go to negotiating the budget with the Treasury, they may not get the entire amount, but they're going to get a big chunk of it, where it's inflated by a huge margin. We ask about question money. So, but if you just look at this figure as it is, that it has been put in there in the strategic plan, the amount of money that should go to meet this water target by 2022, we are really looking at sort of 330 billion shillings of budgeted corruption. Yeah. Taking this, even if you increase the cost, and I don't see how the smaller water projects tend to be cheaper. They don't have as complex engineering. It definitely, if you look at these people and decided to give every household, you take on a per capita basis. So look, the government is not going to provide, but here's a subsidy. If you have a household of 5, here's 60,000 shillings for you to provide yourself with water. I'm absolutely certain that he will actually do it at a cost lower than that, even if it's just roof harvesting with a tank. Anyway, but it is so irresponsible, the kind of budgeting that you're seeing. The New York who scrutinizes these figures? How do they get in there? These are professionals. You have engineers, you have QSs, you have PSs who are supposed to be overseeing these things. They're supposed to be experts in these fields, or they are able to hire experts. They have economists. What the hell is going on in this system? What happens in Parliament? The Parliament has a parliamentary budget office. They have research staff. If they have civil society organizations that are willing to work with them on these sort of things. What are all these people doing when these things like this are going through? So what are we to conclude from this? I think we see a fair amount of prima facie evidence that corruption is budgeted. There is 330 billion shillings of budgeted corruption in the water strategic plan, for example. So that I think that's the point that Auditor General was making, and we're able to see it without doing audit. So since he had done lots of audits, I think he had seen a lot more of it than we have. Secondly, that the PFM system is really not fit for purpose, which was what I feared in the beginning, because really the fox is in charge of the hen house. You can't have a PFM system when it's the fox which is in charge of the hen house. And finally, I think given what we are looking at, it no longer makes sense to talk about corruption and anti-corruption things in legal, technical, managerial function. Let's strengthen this institution, let's tighten this law, let us do these things differently at a managerial level, because really what you're talking about is a fundamental failure of political accountability. Yeah, this is just, as I said, it is a complete subversion of the system. The system has been repurposed. It has been completely repurposed for purposes of extracting public money for private gain. And that, I think, has very, very serious implications. And even talk about when you're talking about the sort of things we are seeing, where we can see that there is a reluctance of people to leave power. You can see why are they reluctant to leave power. If we can be able to arrive at these sort of observations by very sort of preliminary scrutiny, what if people leave power and some government is exactly determined to get to the bottom of this matter actually takes office? So it has very severe political implications. But I want to leave it there, not to go beyond that. I think that is the subject that of conversation that this report invites.